So a very good evening to all of you, and I can see we are live. So once again, good evening to you all, and thank you for coming to this session. I would like to welcome our esteemed panel members who take their time out for this event. And on behalf of CRISIL as well as NMIMS, I welcome all the participants for this event. I believe the takeaway of today's session will be fruitful for you. And we are all concerned about orientation of postgraduate diploma in banking and financial services. So in absence of any info, we tend to lead to the worst scenario. So we thought that this session would be helpful us and to achieve clarity on what is known and what is speculation. So I hope that I'm audible to all of you. In case if you have any concerns, like you can probably put it in the chat window. Our team will get back to us on this. So as you know that this is important since it will help us for shaping our career choices. So we are honored to create this panel to share what we know, answer the questions you have about postgraduate diploma in banking and financial services, and give you some tool talking points to brainstorm once you go back after this session. So before we begin this session, let me introduce myself to you all. That I'm Aneha, I'm your panel moderator for the day. I'm associated with Nationalization Institute of Management and Management Studies, Bangalore, as a faculty in the area of finance and accounting. And currently, I'm chairing a program on postgraduate diploma in banking and financial services. Since I closely experience all aspects of this program, thus as a moderator would try that you all should get answers for your questions. And I'll try that at the end of the day with our esteemed panelists, whatever questions will come to your mind, you will be getting an answer for that. So before directly introducing to our fabulous panelists, let me begin with a thought that how CRISIL and NMIMS jointly conceived the idea for the postgraduate diploma of banking and financial services. So CRISIL is a leading agile and innovative global analytics company, as we all know, and India's foremost provider of ratings, research, and analytical solutions. It has been involved in the executive training business for over a decade and has forged strong relationships with large banks and non-banking financial companies in the country. On the other side, SPKM's Nationalization Institute of Management Studies is one of the prominent business schools in India. It commenced its operation in Bengaluru in the year 2008. Today, it has over 1,300 students across 5 business schools, across 5 schools in 2 campuses, and is renowned for its distinguished faculty members who are proficient in teaching, research, and consulting. NM also holds highly streamlined processes and systems, strong alumni network, international accreditations and associations, and robust industry interface, which make us different. So to enable students and executives to amp up their skills in the financial domain, CRISIL partnered with NMIMS Bengaluru in the year 2019 to launch a postgraduate diploma in banking and financial services, which is popularly known as a PGDBFS program, a 1-year full-time program. The PGDBFS course curriculum that spans 4 quarters and 2 industry internships has been designed by combining the capabilities of both these strong organizations. The curriculum will familiarize students with real-time banking scenarios and give them insights on handling technology development and disruptions, financial analytics and risk management practices, and prepare them to understand the regulatory aspects of the banking sector. The course also tries to capture the varied experiences faced by the banking industry during the sweeping change in the economy in the last few years. I'm not going to stop here because the distinguished faculty from the NMIMS and the experienced trainers from CRISIL will promote critical thinking, learning by doing, and develop a holistic perspective among students using interactive classes, case studies, projects, and simulation. The design and delivery of the course ensures that students will be shaped into industry-ready professionals. The strong brand value and wide network that both CRISIL and NMIMS have in their respective domains draws various banks and non-banking financial corporations for placements and internships. Students of PGDBFS have backed internships and placement with reputed financial organizations such as ANZ Bank, Exec and Wealth, CII, and the Ministry of Commerce, to name a few. The course is normally conducted through classroom-based learning. However, this time around, the course will begin online learning sessions because of the COVID-19 pandemic. With tech-savvy instructors, seamless processes, and well-equipped infrastructure, it will surely be an amazing I know that this was a quite lengthy description I gave about the program, but I'm sure that our esteemed panelists, and I'm very honored to introduce them today. So the next 50 minutes, they will be making the journey very fabulous, and the takeaway of this entire session will be really fruitful, and I'm sure that will help you to shape your careers in your life. So I'm calling always that my panel members are quite awesome. Why I'm calling them that they are awesome? There is a proper reason behind it. So it's my honor to give the introduction about all my esteemed panelists. And if I have to talk about all the panelists, of course, the order in which I'll be introducing all the panel members. As per the screen, you can say, starting from the left to right, I will give the description of all the people. So first, it's my honor to introduce Professor Rajiv Nargankar. So Dr. Nargankar is a director of NMIMS Bengaluru, has worked in reputed institutions as professor, dean, and director. And if I have to quote the name of few of them, like it is IIM Indore, IIM Lucknow, IIM Kozhikode, IIT Nagpur, and IIT Ghaziabad. He has a postgraduate diploma in management from Indian Institute of Management, Bangalore, which is one of the reputed institutions and the dream institution for most of the MBA aspirants. His PhD is from Clemson University, South Carolina, USA. His expertise ranges in areas such as marketing research, digital marketing, tourism, and retail. I have to even add this, that his textbooks on marketing research is used by many MBA programs. His papers have been published in many global journals with a very premium category and rankings. He has also conducted several executive development programs, management development programs, and faculty development programs. He is an avid golfer and has published his autobiography by the name My Experiments with Half Truths. His hobbies include blogging, travel, and photography. I welcome you, sir, and I'm honored to read your profile, and I'm sure we look forward to hear from you, and we'll gain a lot from your rich and wide experiences. Now, it's again my honor to introduce Niren. Niren is the head of CRISIL training business. He brings in rich insights by combining CRISIL's strong domain knowledge with new age technology to assess BFSI client upskills their employees. With over 15 plus years of experience, he has worked on industry research, company credit research, financial analysis, and forecasting, and implemented technology-enabled research products in the product portfolio. He has also been involved closely with domestic and international corporates in areas such as market assessment and demand forecasting. Niren was instrumental in conceptualizing, designing, and developing CRISIL's online research delivery platform, www.crisilresearch.com. He has also implemented a new age learning platform for clients to achieve their design learning objectives. Welcome, Niren, and we look forward to hear your rich industry experiences, especially while we are at a cusp of digital transformation. Now, in the panel, we have Professor Suresh Muni. So, Professor Dr. Suresh Muni is a professor emeritus in Bangalore campus of Narsi Muni Institute of Management Studies and has carved a distinct presence for NMIMS in South India. He has over 48 years of experience, including 19 years in management education and 28 years in industry in roles spanning consultancy, projects, finance, and general management. He's a BTech degree in metallurgy from IIT Madras, Masters in Financial Management from Jamnalas Bajaj Institute of Management Studies, and PhD in Management from Mumbai University. He has worked in diverse organizations and held senior positions, including that of CEO, Managing Director. Professor Suresh Muni spearheaded the global accreditation process at NMIMS in Bangalore. His expertise includes business strategy, risk management, strategic sourcing, leadership, and corporate turnaround. Welcome, sir, and we look forward to hear your long journey, experiences in industry as well as in academia.
Thank you.
So it's my immense pleasure, like before I actually start posing the question to all the panelists, let me give you the briefing that the next 45 to 50 minutes, how we'll be conducting the session and what will be the theme for today's session. So before starting a day as a professional moderator, it's my moral obligation to inform you all that in the next 45 minutes, how we try to combine most of the talk around these three distinct chunks. So as we all know that in the last decade or in the last 2 decades, globally, the economy is suffering with a lot of turmoil and the changes. So these are mixed, like it has a positive impact as well as the negative consequences also. So here we need to understand that how the dynamic evaluation of the Indian banking sector is actually treating, especially in this specific domain, and what is the specific future for it. So while we talk about any specific sector's future, we need to really understand that what are the skill requirements that is needed and what kind of a workforce we mostly look for. And that's a moral obligation for the education sector as well as for the industry so that they can get industry-ready professionals. So what is the role of the triology while we are in the cusp of a transformation in the form of a digitization, that how the triology of industry, academia, and the technology collaboration will help to bridge the skills and create a long-term sustainable industry-ready professionals. So with that, it's my immense pleasure to open the entire discussion with all the panel members. Of course, the questions and other things which I'm posing, mostly it will be revolving around that. We'll be giving you time that towards end, if you have any concerns and questions, you can keep posting it in the chat box, and our team will transfer all these questions. Towards the end of this panel discussion, we'll take all these questions. So let me begin with the first question. And as I told you that we have defined a theme for this specific thing. So how do we assess the performance of the Indian economy, especially for the banking sector, with some of the major economies, like while there is a global turmoil is going on? So if I may pose the question with a very vast experience, Professor Moni, if you can put some highlight in this specific area, then it would be good.
Thank you, Neha, and good afternoon, everyone. It's a pleasure to be here in this panel. I hope it'll be of some use to all those participants who are trying to aim for this program. The question is a rather broad one in the sense that how has the banking industry in India done, performed, and maybe how do you compare it with some of the other major economies? If you look at the banking industry, it has gone through a lot of ups and downs. Initially, post-independence, we had our banking, we had private banks, some of the business houses were part of the banks, they had set it up. And then, while that was there until about 1967 or so, we had the bank nationalization. The bank nationalization brought in uniformity in the sense that all banks were under the government of India. And that was sort of a death blow to the privatization of banks or private banks. In fact, we are coming a full circle now, and if you look at some of the recent announcements in the papers, you'll find that the private houses are being allowed to get licenses for banks. That's a different story by itself. But so what happened was, while the Indian banking sector was fairly efficient in the initial years after independence, once the nationalization took place, I think the efficiency of the banks came down and it declined. And I think the NPAs went up. Overall, the performance is not good. But I think we should not go too much back into history. What is more important is during the last few years. In the last few years, how has the Indian economy, in the Indian banking system done as compared to some of the other major economies? To just set it in context, if you were to look at the entire global banking industry, the size of the banking industry, it's something like $124 trillion in assets. That is the overall size of the banking industry. And out of that, India has got about $2.27 trillion in comprising the public sector banks, the private sector banks, and including the foreign banks also. So the India's share in the total assets of banking is about 2%, or slightly less than 2%. So that is to set the context. Now, the question I've been asked is, how has the banking industry performed over the past few years as compared to the other major economies? Now, there are two key aspects to this whole question. One is, how do you measure performance? How do you assess the performance? And second, what are the other major economies that we can consider? When I look at performance now, you see, what is the purpose of a bank? The purpose of a bank is to give loans to its customers, existing and potential customers, so that they can deploy it in whatever business activities and commercial activities. And that's what the interest from that is what causes the revenue. So if you were to assess the performance, one key metric or one key parameter should be the growth in loans, the loan growth for banks. And that's number one. But it's not enough that if you give the loan, and the loans have to be serviced well, the quality of the asset has to be good. And we should not have what is known as non-performing assets. So another key metric is what is the extent of NPAs or non-performing assets. And the third, which is the third metric, would be obviously the return on assets, or return on average assets. Now, Standard & Poor, S&P had conducted a study sometime in 2018-19, and they published the study in end of 2019. In fact, a little before this COVID started. And they analyzed the performance of the banks in various countries for 2018-19, and they projected it for 2020. No, so if you look at, so this is as far as the three key metrics in terms of loan growth, in terms of the NPAs, and thirdly, in terms of the return on average assets. Now, what are the major economies that we can compare ourselves with? Obviously, we'll compare ourselves with the US and China. So the BRICS countries we can compare with: Brazil, Russia, India, China, and South Africa. And we can also take some of the three major West European nations: UK, Germany, and France, and of course, Japan. So if we can take, say, these 10 countries, it'll form a sort of a good comparison in terms of how the Indian banking sector has done vis-a-vis some of these major economies. Now, if you look at the first parameter or first metric in terms of loan growth, if you look at for 2018 to 2020, the loan growth in Russia, India, and China are expected to have the maximum loan growth, or have had, and up to 2020. It's about in the range of about 10%, which was the lowest level for China, to about 13.9% for Russia, and India comes something at 13.2. So these three countries constitute in terms, that means these three countries have been happening places where there's a need for loan. The economies have been doing fairly well. Now, what about the other countries? So if you look at the other countries, you'll find that the rest of the countries are really in the range of about 2.5 to 6%. And Japan is very low. Japan is only 2%. So Japan has been a very low growth economy. So the banking sector has not grown much. And India and China and Russia have grown. The rest of the countries, basically the West European nations and South Africa and are in the middle ground. What about NPA? So NPA, again, very significant to note that India and Russia stand high on the NPAs. The NPAs in India and Russia are something in the range of about 8.8 to 9.7%. And so which means, although the loan growth has been high in India, the growth of the loan, the NPAs have also been significant. Now, if you look at the other countries are generally middling at about 2 to 3.5%. That is except for that means you talk about China, you talk about South Africa, you talk about Brazil, the BRICS countries, and France. France has also been one country in Europe which has not done too well in terms of NPAs. In fact, there's been slight pressure on their assets. And so they fall in the middle bracket of about 2.5 to 3.6%. Whereas the rest of the US and the West European countries are all in the range of about 1 to 2%. So that's the NPA. So the NPAs are very, very solid. The other countries are solid. When it comes to return on growth, now return on growth, again, what happens is Russia, USA, Brazil, and South Africa are in the forefront. They are about 1.2 to 1.6. You remember, the average return on assets I told you for the banking sector is about 0.9%. So against that, these countries have recorded about 1.2 to 1.7%, which has been very good. And the middle growth, I mean, China falls in the middle bracket, which is about 0.8 to 0.9%. Whereas India has in the last group, which is about 0.1 to 0.6%. In fact, in 2018, India had a bad year when the ILFS scandal broke out. So that time it was a negative minus 0.1%, but it's expected to go up to 0.6% by 2020. So this is the sort of, in a nutshell, what the performance looks like. So if you look at the performance, and believe me, all this performance Standard & Poor has projected based on some of the key driving factors and the key force influencing factors. Now, what are the key influencing factors? One is obviously the US-China trade dispute, Brexit. Then there's also one third major global event, which is really the advent of the fintech. The fintech companies have coming in a big way. In fact, I must tell you this, out of the $125 trillion assets today, in the last few years, the fintech companies have given loans up to about $32.4 billion in the last about 5 to 6 years, which is very significant, which is almost about, you can say about 2% or 2.5%. So the fintech is another major global event. And then, of course, there are localized events in each of these countries. Like if you go to Brazil, for instance, there's the privatization of banks. In France, there is, in Russia, there's a lot of consumer loans which have been added. In Japan, the economy is not growing, and in fact, there's a big stress on their profitability. And in India, there's one major event which is happening, that there's a consolidation of the public sector banks from 18 public sector banks to now 12 public sector banks. So these are some of the driving forces or key factors or the influencing forces for the performance of the banking sector. So against this, if you were to really summarize in a nutshell how India has done vis-a-vis the banks, in terms of loan growth, we have been good. NPAs, we have been high. In terms of growth, we are in the last bracket, but yet it'll go up to about 0.6% by 2020. But overall, we are still resilient. We are not a written-off banking sector. Our banking sector is still very resilient. In fact, after the crisis in 2008, the banking sector all across the world has really recovered. And today it is said that the banking sector, the global banking sector, is actually fairly resilient as compared to what it was in 2008. So overall, the tidings are fairly, I would say, steady. We have had problems with COVID, especially in 2019-20, but I think that's a passing phase, and the banking sector is bound to grow significantly in the years to come.
Thank you, sir, and then well encapsulated. You rightly mentioned that India is quite resilient. So on this note itself, like since you have highlighted and you have nicely portrayed in the form of 3 major matrices, that still we have a scope. So now my next question to Mirein is like, see how industry actually, look, especially in this direction, like while we have a scope, what is the industry readiness and what kind of a workforce or the skill requirement which they actually look, especially, the current time and even in the recent past, we have faced major events which Professor Muni has also highlighted. So what is our industry readiness and what kind of a workforce requirement we are actually looking for?
Yeah. So Neha, I think I'll answer this question in 2 parts. So one, if you clearly see, I think, and Professor Muni very well explained the concept of NPS. The banking sector is going through a difficult phase, and clearly, we have one of the highest NPAs in the world. And this year, I think it will only go up because of whatever is happening around with regards to COVID and businesses getting impacted. But, I don't want to spend too much time on this. I think the world knows this. And, what I really want to bring in is a different perspective. See, when you're looking at building a career in a sector, I think you need to have a more longer term view of the opportunities that the sector is going to offer. And that's exactly what I want to bring in terms of a point of view. See, banking as a sector in India, and while we've seen a very high growth phase in terms of loan book growth, credit growth, or even deposit growth for the last 5 years, we are still just touching the tip of the iceberg. India has a huge unbanked population, and the penetration story, I think it's just starting to play out. And why I'm saying that is because you all would have read about Jandan accounts. On the digital payments front, I think the UPI interface which India has built, I think it's perhaps one of the best in the world, and it's considered to be a case study. And recently, there was even a quote from Bill Gates saying that it's the India's digital payments interface is more like a case study for the entire world. See, what I'm trying to tell here is all these things will drive higher financial inclusion over the next 5 years, 10 years, and the sort of growth that we'll see in this space, which is not just banks. I mean, when there's higher bank population, higher number of people who have access to banking, it's not just the banking sector which benefits, but the entire financial services space. Because see, once I have access to formal credit, or once I have a bank account, I will gradually also get introduced to maybe some of the other, savings products. Maybe I'll look at a mutual fund at a later date. Maybe I'll start taking an insurance as well. So, the entire financial services space, if you ask me, is going to have about trendline growth rate for at least the next 5 years, 10 years, the way I see it. And this is very significant when you're looking at this sector from a student's lens, because what you want, a sector which is sort of growing faster than the average growth that you're seeing in the country, because that's where you will get a lot of opportunities to grow fast and grow up in the corporate ladder. So that's one element. I think the other piece, Neha, which you asked us, what sort of talent opportunities or skill gaps are there in the industry? See, I think I just want to highlight one trend there, and there's a big change which I see happening in the sector. See, the erstwhile PSU banks, they had this model of moving people across functions every few years, which means that today I could be doing credit. After 3 years, maybe I'm transferred to a branch, and then after some few more years, I work in HR or even operations. See, while this is good from the perspective of having a rounded view of what's happening in banking, uh, it really doesn't give me the ability to specialize in any particular skill set. But that's something which most banks are moving away from. While it's still there in PSU banks, at least for the critical functions like maybe credit or treasury or risk management, they are increasingly looking at having specialized people who have those required skill sets, and are able to contribute in a much better way to the cause. Now, when there's this shift in the industry staffing requirement, there needs to be a similar shift which is happening on the academic side as well. So the earlier model of training people on all and sundry areas, or having professionals who are who have a view of everything but don't really master in a single area, I think that will pass out over a period gradually. I'm not saying it's going to happen tomorrow, but gradually we'll move towards people who are skilled in specific areas. And this, if you ask me, is the biggest skill gap which the industry faces today. How do you get people who are trained on, let's say, credit assessment for doing a credit function role? Or how do you get people who are experts on treasury in capital markets to man the treasury function? I mean, the day we've got courses that are able to offer this, I think we'll be able to bridge the gap between the industry and what the the
Talent
talent which
required.
is available.
Right, right. Very well, nicely portrayed, Viren, and I'm sure that most of the participants, they might have this kind of a mindset. In fact, they would have been, expecting about this question, that in the near future, if the kind of a workforce requirement is changing, so I should not go with the silos mindset that only in one specific area. I should, align my focus. So of course, like if that is the case, so this question is quite obvious to come, like, since Miren has rightly mentioned that there is a lot of scope and the growth opportunities are there, and we have to prepare for various kind of roles like say credit assessment and the other areas. So I would like to take this question back to NMIMS, is that how are we preparing our students? Like how education sector looks to all these skill gaps, and what are their practices or the process which they are following from their end, and how they are ensuring that this kind of things are being fulfilled, and how we can respond to this banking industry requirements. So if I may ask Professor Moni if he can help, and NMIMS, like I need this response.
Thank you, Neha. Uh, This question of talent requirement and skills is perhaps one of the most vexed questions. And, we have the issue, we have so much of unemployment in this country, but yet people are not employable. There are a lot of our graduates who are not employable. So there's really a mismatch between the talent availability and the talent requirement. Now, let me start off with a basic question. What are the skills required in the banking industry? Let me take the banking industry. Now, if you look at traditionally, and which is true of many other professions or many other sectors, you in terms of skills, you look for communication skills, problem solving skills, numeracy skills, and in banking you'll require for customer services, you'll require for emotional intelligence and so on. And then when you say you want a financial analyst, problem solving and communication will definitely be there. But apart from that, you'll require an accounting qualification or a finance qualification. You'll require analytical skills, and of course, these days they have to be really fully proficient with the IT software. Though I remember in 1980s when this whole technology revolution started, I would say, or the advent of computers in banking industry. I remember Jack Welch, who made this famous statement. He says, after 10 years, banking will no more be about the conventional banking and finance, but it will be more a technology industry. And that's a very, very sweeping statement made by Jack Welch way back in 80. And now it's becoming all the more true. And that's why today a finance analyst has to be as much proficient with IT software, apart from his commercial banking and finance requirements. And then when you look for attributes for a banker, you look for passion for numbers, you look for integrity, you look for attention to detail, things like that. Now, these are, I would say, still very traditional. But what has happened in the past few years, technology, I've already given a sort of an emphasis, but the digital revolution is really sweeping the banking industry by a quantum. It's a quantum leap in terms of digital assimilation that the people are expected to do. So if you look at, today, if you look at the banking, they say there are 6 pillars in terms of the digital revolution that they have to absorb or assimilate. And number one is first, how do you come into the future of communication with customers? Accenture had done a study recently, and they said that I did a global survey, and they said 66% of the customers say that 50% of their transactions are digital. 66% of customers globally say 50% of their banking transactions are digital. And 71% of those surveyed said they would like automated support. They would like automation and support for that. So which shows that the consumer of banking services is really well sort of positioned to assimilate and absorb the technology, and he or she wants to do banking the digital way. So this is number one. So which means the communication that the banking sector will have to do with potential customers or prospective customers is really through the digital. Now, the second thing is the digital awareness. So the employees in a bank have to be digitally aware. When we say they have to be digitally aware, I think the first thing is regard to the platforms. What are the various platforms available? There are a number of platforms. I'm not an technology expert, but today there are a lot of platforms from which they can operate and then interact with customers. So they have to have knowledge of platforms. Second thing, they have to knowledge of how do you do marketing and sales and reach the ultimate consumer. Use digitally the modus operandi of doing marketing and sales. And third is, how do you advise a customer? Today, when you open any of the banks, you'll find a chatbot. You'll find through artificial intelligence, you'll have a chatbot, and there is someone, the person is talking to you, the artificial person. So that is for giving holistic advice. A lot of holistic advice today is given digitally through artificial intelligence. And the third thing is, people in the banking today have to be agile and entrepreneurial, because there is so much of competition from the fintech sector. In fact, it is said that 33% of the traditional market share of the banks will go to the fintech. The fintechs are penetrating the bank so much. So the people in the bank have to be agile and entrepreneurial to see how they can use technology to maximize their reach. That is number 3. And then the question of course, risk comes, because with so much of data floating around, the data privacy issues, I think risk, the whole question of risk and governance. So, and the banking people have to be familiar with that. And then, of course, is the question of data analytics. Now, because there's so much of data available, and if they have to take decisions day in and day out, tactical decisions and strategic decisions, how do you manage data? And finally, of course, it's the, how do you, without
So we could not able to hear you. Can you hear us? Okay, so you can put attend on this then. So we cannot hear you. So I guess that as Professor Muni was rightly portraying this thing, and then we have our time, this thing also. So if I am not wrong, like of course, whatever the takeaway we could able to hear from Professor Muni's talk, that he actually emphasized that how the technology is actually changing in this entire phenomena, and that banking as well as the education sector, both are working in this specific direction. So can you hear us? So mostly sir has emphasized on the facts of like how the technology is actually coming and like penetrating, especially in the banking sector. And we should build even the tech-enabled people and the workforce who can go and like especially, contribute in this specific direction. So of course, then my next question will come here that especially Mirein, like since we have conceived this idea and then CRISIL has jointly conceived the idea about creating a program that postgraduate diploma in banking and financial services. And we have heard from you all that there is a lot of changes are happening. It's not just technology related changes. There are some other economy related turmoils are also happening. So how this kind of a postgraduate diploma in banking and financial service will help to shape the career and make the long run sustainable workforce?
Yeah. So Neha, see, I think, at the start of the session, you spoke about creating industry ready talent. And if you ask me, that is the, single point objective we have for this program. Now, how do you create pass outs who are, job ready from day one? And the whole idea is, you know, bring in our understanding of, what is required by the industry into the program, and train the program in a way that train the participants in a way that when they go back, they can start contributing from day one itself. See, I think CRISIL, as part of our CRISIL executive training business, we've been working very closely with all the leading banks in India and even the non-banks and other financial service companies to, train their employees. And, one thing which I always keep hearing from my clients is, and they have this same problem statement, which is, so whether you speak to a bank or a non-bank, the problem statement always remains the same. How do you cut down the post joining training period for employees? And just to give you a sense, I think once employees join this organization, it takes about 3 to 6 months for them to get trained before they start contributing to the job. And this, if you ask me, is a pain point for the industry, because especially in the current times where you have very high attrition rates. On an average, you expect a person to move out in a span of 3 years. If you spend initial 6 months on training that person, which means sort of at least 15-20% of the time that he's spent in the organization, he's spent on getting trained. Now, we've been working with a lot of these clients of ours, be it, banks or NBFCs, to create very innovative course structures to, which can help them cut down this training period. But while we are doing this, I think, the question always I ask myself is, is this the right approach, or is this the right way? I think what better way to do this rather than other than training the students during the post graduation course itself. correct? And which is the whole idea with which we conceptualized this program. So what we're trying to do here is, bring in our library of content, case studies, courses, which we are using to train the employees of these various organizations after they join. So I'm just trying to bring it slightly early into the entire life cycle, and rather than they going through this after they join, it is much better if they start learning this during their post graduation course itself. The second thing what we are doing is, and this is very important. See, when CRISIL is, I mean, we are tightly integrated into this entire financial services space, correct? So, most of the banks in India, for instance, will be using our model. They call it the CRISIL RAM or the CRISIL risk assessment model for doing all their credit assessments. And similarly, CRISIL's models get used by the capital markets for doing, let's say, mutual fund rankings. And there are various other such, so I'll not get into all these specifics, but there are various models, frameworks, tools, which are proprietary to CRISIL. And what we try to do as part of this program is bring in a lot of these, frameworks, models into the program itself. Now, what this does is, when a participant passes out and joins the industry, starts working, the workplace does not feel alien to him. He would have already picked up a lot of these, things while he or she was, going through the course. So this is how we are trying to change the situation. See, the other is, Professor Moni, I think before there was this, slight disturbance in the line. He was talking about the entire importance of technology. And again, as I was saying, we understand the processes, the way technology is getting used within banks. So that's again another element that we've tried to build into the program itself. So another way of maybe, trying to get participants job ready for the role. So I hope, Neha, this answers your
Yeah, yeah, of course. In fact, Viren, I can see in the chat window, there are, of course, so many questions which revolves around this, and they are deep diving into most of the skills. And I'm glad that at least this postgraduate diploma in banking and financial services is going to help in that way. So now, I would really, pose this question to Professor Rajendra, that sir has such a wide experience across various institutes. He is a very lively person involved in various activities. So of course, sir, we really wanted to listen from you that how in the difficult times, especially in this COVID, while the students, they, started moving mostly towards the other universities are also offering the similar kind of online platforms where they can go and start taking up the courses. Why NM is little different, and what special thing which we are providing to them and their inclination and the other things which we can fulfill. So I'm sure that students, they
Sure.
are looking for all these things.
Neha, thank you for that question. Let me make a pitch for not only NM, but NMIMS Bangalore in particular, because this is where we are offering. And not just Bangalore, it's in the heart of Bangalore in the Koramangala campus that we physically offer the program normally for the information of all the incoming participants who may be interested. Of course, COVID has forced us to seamlessly integrate the offline, online modes. Right now, it's mostly online. But we hope that with the passage of time during the next offering of this program, that very soon we will also return to the offline mode. But in the meantime, we have adjusted very well, unlike maybe some others who had some issues or problems seamlessly moving from totally offline to totally online, or in a hybrid mode, which some schools and some institutions operate. I think we have adjusted very well. Yes. And we are about to graduate the first batch, which started last June, just a little bit delayed, not a whole lot, without affecting them too much. And our design of the program, since right from the beginning, CRISIL was part of the design as well. We also went and talked to a lot of banks before the program got finalized, and its 2 internships, for example, where to place them got finalized and so on. So banks as potential customers of this program were also involved. So it's a 3-part design. It's from the academic content, NM, from partner, industry partner, CRISIL, and from the customer end, the banks. So because of this, I think the design is more or less foolproof. And usually one of the 3 or 2 of the 3 ends are missing in design of any program by an academic institute. Either they do it alone, or in a few cases, they may have a partner, though very few of them that I know have industry partners of the nature that we have, fully involved and delivering part of the content. So I think that makes it unique. Bangalore, as Professor Moni initially said in his first part of the talk, that banking is now changing from purely an accounting function or a ledger-based activity to a tech-based activity. And which better technology hub than Bangalore can you think of?
Absolutely, absolutely.
Valley of India. So I think that's basically why NM is unique. And of course, our faculty are stars in their own fields, including finance.
Oh, thank you so much, sir. And I'm sure that students like the kind of a thing which they are always looking for in that the NM is quite well equipped to provide all those things. So, so especially like during this time, like we have handled the entire program, especially during pandemic time, we have seamlessly transited from the directly offline mode to the online mode. Of course, we don't know, this is a quite real-time situation, like for how long this online mode will continue. That's quite location-based. So if we have to talk about our technical capabilities, can we say that this blended learning will be the future? And then the similar kind of a programs, how we can deliver the similar kind of a programs in the near future, while we have to only continue all those things in the form of a blended learning.
Yeah, I think we should also distinguish between a generalized program and this particular program, which is a very, very niche and a specialized program aimed at a particular sector of industry, which is basically banking and financial services related industries. And the general MBA actually is a more generic offering, I would say, for a different kind of a student who has not decided which areas or which sectors he would like to work in. Whereas our program here, which we are talking about in this discussion today, is a very, very focused program, one thing. Secondly, it's instead of a 2-year MBA, this is a 1-year MBA. So because of its focus, it also saves you a lot of time.
Right.
So rather than doing a general MBA and then trying to figure out and get into the same sector as this one, we are saving 1 year of the participants' time. The second is the level of involvement. As I was just saying earlier, the level of involvement is phenomenal from all 3 angles, the customer angle, the banks, and so on. So we have a dual or a triple advantage of this program. And we also are sort of demonstrating to the participants during the program our capabilities through tech delivery, if you want to call it that. NM is also tech enabled, similar to the banks in which people are going to work and work digitally most of the time. Whereas the customer interactions are probably going to be only at the initial part where you make customers aware of various products and services that you are offering, and then only deal with customers as and when required. Maybe relationships are there, but the relationships are of a different nature than what they used to be in our parents' generation, for example, where they used to go and with the person at the bank every 3rd day or 4th day. That's not going to happen anymore, at least in physical aspect. There may be chats and chat bots and other enabled or enablers of technology, and which will enable the CRM to happen. So CRM would be there, but it's going to be in a different format. And that is what we intend to offer to the student, in which case, we are claiming rightly so that he will be or she will be ready for the industry the moment he or she steps out of this program. And therefore, the banks and financial industry will look at them in a different lens, through a different lens rather than MBA perspective. So I think these will be the strong points.
Absolutely, sir. Like you have very rightly mentioned, and the way you have actually covered that the three major associations which have actually joined together, the industry, academia, as well as the final destination of the partners, the customers, where our aspirants will go and like start delivering. So in that way, if this kind of association is there, and this collaboration will surely give them completely industry ready professionals. And in fact, Miren also rightly mentioned in the beginning that we are actually saving out on a time, and even industry would be also happy to have them because they are saving on the training cost, and once they will be joining the campus, they can go on their roles from the day one. They are ready for client facing and the other things. So of course, like since we have a time limitation, so thank you, sir. It is very insightful from all three of you. Of course, we have several questions, but since we have a time limitations, we'll take those questions. But before that, we have a poll. So I would request to my background team if they can run a poll. So since like we have talked about technology and all, so we want your opinion. Before that, we can compile all the questions and we'll take one final takeaway point from each one of you. If you can get some 30 seconds to find out that, to fill that poll, and then we'll probably take your questions to the right panelist. So I hope that most of you could able to finish the poll. So I have a couple of questions since we have just last 5 minutes and we have to give a closure also. Maybe I could not be able to take up all the questions. So of course, like there are few questions which I may put as an open panel, and then everyone can give their opinion on this. So there are questions: does this courses benefit for non-banking financial graduates as well? So what is our say, like how the people who are not from the non-banking area, their graduation is not in the banking area, how this course will be useful for them? So if I may keep this question, so the panel.
Maybe Neha, I can take this.
Yeah, Miren, please.
See, I think this course is designed so while we are talking about banks as one of the anchors in the financial services industry. So this course is designed keeping in mind the needs of the financial services sector. So the opportunities that the participants will have once they complete this course could either be, let's say, in a bank, or could be in a insurance company, in a wealth advisory firm, in a asset management company, which we commonly know as a mutual fund house. So these are the key avenues, or even an investment bank. I think I could see some question around mergers happening. So yeah, I mean, these are all the areas, because see, the skill sets that you require across all these financial service organizations, I think there's a significant overlap, and we are covering all the key pillars of the requirements there. So I think these are the opportunities. But if somebody is looking for a career outside the financial services space, then I think this is not the right program for them. This is purely designed keeping the financial services industry in mind.
Yeah, right, absolutely. I hope the one who have asked these questions, they have got their overview. So yeah, of course, most of the questions are based on the skills. So which I'm sure I told my background team, they will answer to them. So there could be a probable question which we got it. Of course, that can we complete the course on a part-time basis? So of course, part-time basis, like if I have to understand from NM perspective, that can we give a flexibility to complete the course on a part-time basis? So if Professor Moni, if he can answer.
You see, in order to complete the program, there is a certain minimum number of credits on class teaching learning hours that you have to undergo. Now, you see, one of the advantages, see, today we are talking about online learning, we are talking about face-to-face learning, we are talking about blended learning. So when you say part-time, I am presuming you're meaning that it will be online learning, that you don't want to come to campus. That is what I'm presuming. So when the program was designed, it was designed as a face-to-face program. When the last 2-3 months was completed on an online basis. So today we have become, I think, quite adept at delivering lectures on the online format. And I think the students also have learned in the process to how to assimilate. So I think we still have a long way to go in terms of perfecting. It is not going to be as perfect as the face-to-face environment. But I think both sides, the faculty and the students, have come a long way in the last, I would say, 9 months. So if you ask me theoretically, can we do it as an online? We possibly can. But the program has got an element of internship. We have, I think, 2 internships. Those internships are live internships, and that is perhaps one of the most, I would say, significant aspects of this whole program. So if you must attend the internship. Without attending the internship, you will not be able to complete the program. Okay. So I mean, Dr. Nargundra, you want to add something, or Miran, you want to add something here?
Not really. I think you have covered the base. So I think the intention was to have it offline, but we have adjusted very well, and we will do whatever it takes to deliver it to its full potential and fulfill the purpose of the program.
Yeah, right. So of course, like we have set of so many questions, and we have a time constraint, so we may not able to take all the questions, but we assure you that our background team, there is a strong team which is working, and we are in close consultation with our panelists, since we have booked a slot for a very specific time duration. So mostly all these questions will be answered offline, and that way.
I think one important question somebody has asked about the last date for application. Maybe you can clarify that.
Yeah, right, sir. Yeah. So last date for application is mostly like by 15 December, you can apply, because from January onwards, we are starting a program, and we have a complete process which we have to basically take through, and then only by January 1st, you can also start doing it. Since already there are few students who are involved with this program, they are doing a certification program which is complimentary given by the CRISIL. It's on wealth management. So we really want that most of you should come and participate. Of course, it's a complete process is there through which you have to go through. And then according to that, towards the end, the way you will be succeeding, then we'll be able to get you there. So on this note, I just wanted to check that if we have the poll results.
I think Miran might like to add something on that wealth management complementary.
Absolutely, sir. Absolutely. Miran, if you can.
Yeah, no, I think, because of this entire COVID scenario, one of the things that we are facing right now is, participants are, instead of being there at the campus, in the initial period, they might be doing it online. So we thought, how can we make this online experience even better, stronger? So I think there's this wealth management course where we work with, big financial service companies, and I'll not want to name any specific company, but they're large organizations where we train their entire employees on this wealth manager certification. We thought, if we offer this to the current batch students, it will, so obviously it's an added certification for them, which is well accepted in the industry. But more importantly, I think, it really trains them on a new dimension. So while we spoke a lot about, banking, wealth management is something which is central to not just banking, but even asset management companies or mutual funds, and even insurance companies or wealth advisors. So when I'm working on this certification with a lot of my clients, I'm working across all these organizations, and this, certification. So what we said is, for at least this batch students, we'll not charge them anything for this certification. They'll have a complimentary access to the entire training material, and as well as they can appear for the certification exam without paying anything for that. So that's something we've decided in consultation with NMIMS.
That will be quite good for all our students. So towards the end, we are getting close to the end of our time together. If there is one thing I would like to ask all the panelists that the audience should take away from this session, what it would be? And of course, this question is to all the panelists, that one takeaway for today's session for all the students, if we can. So let me begin with Professor Rajendra. So how you will highlight that one takeaway from this session?
I would call it a 3-in-1.
Okay, nice. Wow, very nice, sir. There is nothing well crisp manner you have actually put it. Professor Moni?
Yeah, the 3-in-1, what Rajan said is fine. I would add one more. You see, what I want to impress upon the participants is that you are coming to a program which is unique. You've got the elements of finance, and there's also going to be a lot of analytics and technology. These are the three kingpins: the knowledge of finance, analytics, and technology, which will stand you in good stead throughout your career.
Okay, thank you. And Miren, from you.
Yeah, no, I also want to go on the participants saying, there's a lot of vigor which is required from their side, because we've tried to pack in a lot of stuff into this program. Obviously, the capable faculty and everybody else will be there to handhold them, but from their side, there's a lot of hard work, rigor which will be required during this 1-year period to sort of gain these skill sets and successfully complete this program.
Okay, so thank you everyone. And participants, this is my request to you. If you have any questions, you can even, there is on the screen, you can see a number as well as the email ID. So you can directly approach on this. They're available always. And I would really like to thank you all for your valuable time, and then coming here and sharing your experiences, and even giving all the opportunity to all the students so that all the questions will be answered. And if they have any specific problems, of course, they can always come back to us. So from my end, it is a thank you to everyone.
Thank you.
Thanks, Neha, and thanks everyone else.
Thank you, my background team also. And I would really, appreciate them, because it's a lot of efforts have gone from so many days in the recent past. So thank you, Surbhi, thank you, Jimit, and the entire team, if I'm missing out on anyone, Sabdar and all. So thank you so much, everyone. And participants can still write their questions and then send it on the IDs.
Yeah. Thank you, Miran, Surbhi, Jimit, Neha, Rajan, and all the background work team.